What's going on, guys? It's Brad with Trading OTCs coming at you tonight, and have a really special one for you. Talking about one of our members who saw a nearly 200% gain on a 2-day swing trade. First of all, let me go ahead and just welcome you to my channel. If this is the first time, if it's your first time visiting, I do appreciate you tuning in here. Sorry, I was just adjusting my volume. And if you are first time here, please stick around. I think what you'll find within this video will be useful, especially if you have never traded penny stocks, if you're unfamiliar with how they work, because if you know, I'm part of the Techbuds-Solutions group. So if you're coming here from Ricky's channel, you'll find that my style of trading, or our style of trading in the OTCs, is much different. So I encourage you to stick around, and maybe you'll learn something and come back next time. For those of you returning, thanks again for welcome back. The particular guy that I would like to talk about tonight, as many of us know within our Discord group, is Kiko. He actually specifically asked me to pronounce his name as Kiko, because some people get confused and call it Kiko or whatever in the voice chat. So it is Kiko. It's K-I-C-K-O. And he's actually, I just listed him as one of my admins within the group. He's just really done some really great things within our group. Always brings positive energy and brings out quality due diligence. And that's what I'm going to touch on today. So the ticker that we're going to discuss that he shouted out yesterday was EOMN. They had news coming out that they resolved all of their convertible debt, which, if you are familiar with trading OTCs, is huge news. We're actually waiting on something similar to that on another ticker that we've been following, which is LIBE. So if that goes through, we could potentially see similar reaction to the resolution of that convertible debt. Now, I want to go into what convertible debt is, in case you're not aware of what convertible debt is. So whenever we talk about dilution, and those the market makers that are dilutive market makers, like that we see on level 2, that's that debt that's converting into the stock. So when they resolve that convertible debt, that means that it's no longer being diluted, which translates into it being a positive thing for a stock, because once another catalyst comes out, such as, I don't know, acquisitions, whatever, that stock is going to move so much easier, because the float is going to be smaller, and the potential to lock up that float so it really takes off is much greater, rather than if you're in a stock that is diluting. It makes it much harder for that to move, on any kind of good news or anything like that. We actually saw evidence of that. A lot of us played the ticker ADAC, and news came out that they had record-breaking revenue for last quarter, and it barely moved. And it barely moved because they have, some convertible debt in there. They have some dilution going on, and it ran up, a decent 25%, and all of a sudden, it started to come back down because it looked like there were some shares being dumped into it, unfortunately. So anyway, to go back into EOMN. Now, every time I like to feature one of our members within our group, I always like to get their side of the story. I don't want to put words in their mouth or anything like that. So I always like to try to ask them, what was your thought process, and how did you come about and had the confidence and the due diligence within yourself to buy into that stock and know that it was going to run? And so when I was talking to Kiko about it, he said that, he has a scanner set up, and he uses Equity Feed. For those of you who aren't familiar with Equity Feed, it's an excellent scanner. I actually think that I'm just going to go ahead and do a video on Equity Feed here very shortly. A lot of people are asking me on how to set up scanners and whatever else, and I have set up a scanner on Thinkorswim. I do have a video on that, but I don't think it works quite as well as Equity Feed would, because Equity Feed has, will announce news on whatever you're watching and that sort of thing. What Kiko did was his scanner is based off of dollar volume. And when he saw a sudden spike on EOMN, that's when his light bulb went off and started to dig into it a little bit more. And what I'm going to do is I'm going to go ahead and somebody asked me if I trade options. No, I don't trade options. That's not what this channel's for. So anyway, I'm going to go ahead and share my screen with you guys and show you what I mean. All right, so this is the chart that I'm going to use for EOMN. If you guys aren't familiar with this platform, it is tradingview.com. I highly encourage you to use this platform when you're doing due diligence. And the reason why I'm using is because, as you all know, that we are all using different platforms when it comes to exchange platforms such as E-Trade, TD Ameritrade, whatever. And I think this allows me to universally do any kind of analysis for all of you, because anybody can just go to TradingView. There's no like confusion when I'm using Thinkorswim or E-Trade or whatever, because everybody's on different platforms. So this way, you know exactly what I'm doing and how I'm showing it to you. And so when Kiko saw that random spike on dollar volume, that was right around here, I believe, on EOMN on Monday. And what he did was his next step, once he saw this spike in dollar volume, because you can see here actually previously there was, and these are volume bars for those of you who aren't familiar, and so the volume really wasn't much bigger. If I let's pan out here, yeah. So if you can look at the volume, there was a random volume spike, back in early January or whatever. But since then, there wasn't really any real volume up until yesterday. And so that's another indicator that something must be going on, because there was nothing going on up until yesterday, literally nothing. And another good, I guess, rule of thumb, if you will, is to look at activity that happened prior to that. And there was very little of that, because sometimes there may be instances where certain people may know that news is coming, so that they will try to load up before everybody else gets there. And you'll see that with some random volume spikes leading up to the event. But the event occurred right here. And what Kiko was able to discover was that this particular ticker had not yet released their news quite as publicly as normal ones do. So OTC Markets is a form of due diligence, a resource that we use when trading over-the-counter stocks. So and I already have it pulled up here. This is the website's OTC Markets one. And so when Kiko saw that there was random volume spiking up, as I showed you, and again, that's dollar volume that was showing up. The first thing he did was go into the profile of this ticker symbol. So you just go into the search tool here within OTC Markets, pull this up, and the first positive thing, this is a pink sheet. This is current information. If someone is not current, often, or not someone, if a firm is not current, oftentimes you'll see a stop sign or even a yield sign here, and that means that they aren't current with all of their filings. So sometimes if you look at share structure or any other filings that may be backdated and might not be as accurate as it should be, so there's not a whole lot for you to go off of. But this one, fortunately enough, is current. And so he saw that the outstanding shares was at 60 million, and that the float hadn't quite yet been reported since the last one was back in September, but this was the most current reporting of the outstanding shares. So worst case scenario here is that the float is at 60 million, which is still very good. Typically, we'll trade, I personally would trade anything that's under 500 million. Sometimes there's exceptions, obviously, with special catalysts that may come around, and especially if there's a certain amount of dollar volume that's associated with that stock, whereas the float or the outstanding shares might not matter a whole lot because there's so much attention being drawn to it. But this one in particular had a very low float, but not too low. as to sacrifice any kind of liquidity. So this is like perfect storm setup here. And so the next thing he did was look at the news, and this was reported that they announced the elimination of convertible debt, which again is probably one of the biggest catalysts that you'll find within the biggest common catalyst. Oh, crap. The biggest common catalyst within OTCs is that they're converting that debt and basically just getting rid of it. And so again, this is a good revenue stream here that they're going to be building. They're announcing Bungie, so white label. So not only are they getting rid of debt, but they're also have this platform that's similar to YouTube, Hulu. So it's a streaming service that they're providing. And so that basically you have two catalysts in one here. And as you can see, I actually marked for you when Kiko got in. So he verified it through Discord. There's a bot within Discord that tells you, when you get into a stock and when you sell out of one. And so he got in right around his average, he said, was at 0080. And then he sold it at 235. So I went ahead and drew lines here for you just to kind of give you a good visual of when he sold. And he actually sold today right around this time frame. And yeah, I mean, that's nearly 200% within 2 days, guys, within 2 days. And this is simple. This wasn't like some crazy math problem. Let me bring it back here. Yeah. So again, this wasn't some crazy math problem or some wild science experiment. This was just literally watching the dollar volume spike and then going to OTC markets and seeing if there's a possibility as to why there's this spike that's occurring. And he did that. You look at the share structure and make sure that share structure is there and that there isn't some crazy amount of, afloat or outstanding shares. Then you look to see what kind of news there is. And then he brought it to the group and shouted it out and said, hey, guys, like there's no PR out on this yet, but and the only place I've been able to find it is OTC markets. And so everybody got into this at the absolute beginning of this run. So it wasn't just Kiko that got into it. A lot of people did. And we had just awesome results awesome gains as a result of that due diligence. And, again, this wasn't something where he just shouted out and people just followed his command. People actually went back through. He shared the links that he found, and people went back on his own work to verify all of that. And then that's when they made the decision to get in. So getting in under a penny and then selling at over 2 cents, guys, it doesn't get much better than that. I don't know if what the future holds for this particular stock, but it certainly was a excellent run for EOMN. And I couldn't be happier for Kiko and the rest of the group that was able to capitalize on that great work. So great work, Kiko. Shout out to you. I always just love sharing the success of others within our group. It's always one thing for me to go ahead and tell you how much I'm making or whatever. I feel like everybody does that, but it always means something special to me, and I'm sure it does to you too. And it kind of inspires you to say to yourself, hey, I can do this. If someone else within the group who's just as involved as I am can do it, then I know that I can. And I'm not just here blowing smoke or anything like that. So this is just always my favorite thing to do on top of the interviews. And I hope you guys enjoyed last night's podcast with Peter. I certainly did. I really just had a great time talking with him, and I hope that he was able to bring some inspiration and motivation for you guys. I know he did for me. But I'm going to go ahead, as most of you know, I'm going to go ahead and see if there's any questions that you guys might have, and go from there. If this is your first time visiting, I always like to go within my live streams and answer any questions towards the end of the video. And, that's kind of how we end things. So just scrolling through here. First thing off the bat. So Boxton Fresh. I always love reading these usernames. So Boxton Fresh says, "Is there a certain percent that you like to shave off in order to ride free?" So I think what you mean is like riding free shares, right? So once you sell your initial position, I always like to try to find stocks that either have 50 to 100% potential, and then once I get that 50 to 100% potential, I take my initial investment, so that's protected and that's safe. And then the rest of it is pure profit that I can just ride on. And then I can sell that whenever I'm happy. That's why I was always taught. That's what I share with others, is that take that initial investment, make sure that's protected once the run starts, and then, ride the free profit. Because after that, it's just profit, right? You're not hurting yourself by leaving it in there. And then you can sell that whenever you're satisfied with the amount of profit that's grown since then. So that's the long and short of it when it comes to finding that getting out of the position, essentially. Hey Brad, I'm starting with $500. Is penny stocks my best option? So I'm actually going to have a video on that this week as well, as to how much you should start off with. I've addressed this several times, but I've never actually dedicated a video to it. So rate, I'm going to butcher this too. Rache Fry, I think that's the way you pronounce it, is asking, is $500 your best option? No. And I'm not going to tell you why. And it's not even just with penny stocks. It's with any trading. Okay. If you have a trading style where you're looking to just find 5 to 10% potential on $500, you're seeing what, a very small amount when it comes to, seeing growth. And obviously green is green. We always like to promote and say, whatever, a win is a win. It doesn't matter how much it is, but there's a little bit of false truth with that. And I'm not saying that, winning isn't good or anything like that, but I said it right. Good. But you will start to grow frustrated if you're starting with $500 and you're seeing tiny gains. The other thing is that in relation to penny stocks or OTCs, I always like to encourage diversification because of the volatility that occurs down here. There are instances that you might do all the due diligence you can, and a stock might look perfect, but for whatever reason, it doesn't work out. You might experience a loss on that. But the idea is, because you're doing such good due diligence, that if you're in several positions, just say 3 to 5 positions, those other positions will outweigh that one loss that you might have. And that, it kind of not only just off balances that, but off balances that exponentially because of the type of volatility we see down here. So I want you to, whenever somebody says I only have a few $100s to trade with, I always, the first response is always to just save more. If this is something that you're truly passionate about and you want to continue to save money, I always tell people, I'm sure there's something in your closet or your garage or whatever that you can sell and make a little bit more money off of, and really set yourself up for the best possible outcome by having anywhere from $1,000 to $3,000 to start off with. I was just speaking with somebody today that had $1,000 this time last year and now has grown his account to $70,000. So it is possible. Having a few $100s is just not realistic in my opinion. And I don't want to sugarcoat that. Of course, you see these crazy stories where people turn $100 into $100K, and it's like, that's not the real world. That's like 1 in a million. You might as well just play the lottery at that point. So anyway, I know I got a little bit on a rant about that, and I will address that in a future video. But I just feel so strongly about that. Okay. When you find a stock that could potentially run, do you look for all of a sudden spike in volume and then do your DD on the stock to verify? Or how do you find these early? So again, that's going to be depending on how you have your scanner set up, and the way that most of us have it set up is to look for dollar volume. I do have a scanner video on Thinkorswim on how to do that pre-market. So that's the first step. And then once you see that random spike, I think, it depends. When you get enough experience as a trader, you look to see how fast it's running, and you may want to even, if you can afford to, and this is a strong word, if you can afford to do this, take a small starter position based off of how much money is coming into that and how much it's really starting to run, and then go back and do your due diligence and see if this is something that might be worth adding to your position on. Otherwise, you can take it out. If you lose, you're not going to lose a whole lot. If you gain, you maybe gained $100 and you're just like, this doesn't smell right, I'm just going to look at something else. So that's kind of one of the strategies. Like if you're afraid that, well, I don't want to say afraid of missing out, because that causes you to chase, but like just so that you can at least get a starter position in that, and then add to it later if you feel that the due diligence is there and that everything makes sense. So that's kind of one method to getting into something before it runs. The other one is obviously if you're just doing due diligence on some things, and it has yet to have run, but it looks like there might be a catalyst in the future. You get into it way early. You start to get in at the bottom. A lot of us have a term called bottom feeder. So you're just getting into the very bottom of the stock, even if there might not be a whole lot of volume there in the beginning, but it's in anticipation of a catalyst later on. All right. Just going back through here. A lot of comments from last night. Yeah, guys, I loved it last night. It's starting to become one of my favorite things to do here on YouTube, is just do those podcasts with millionaires and just picking their brain. Peter was he was awesome. Just super energetic, and he and I talked for a little bit after last night's live stream, and it was just really cool to talk to him, and he's very interested in continuing to build a relationship, just from a business standpoint. And I'll be featured on his channel actually in about a month. So stay tuned for that. He has a Sunday night get together, if you will, during his live streams, and there's a little bit of uncensored there. So if you want to see me kind of a little bit more in a relaxed state than I am now, then maybe tune into that next month. I'll let you guys know when I'll be there. That way, if you want to watch it, you can. Okay. I'm new to OTC. Can you explain it in layman's terms? I'm not really sure what you want me to explain in layman's terms. You have to be a little bit more specific on that. What sources do you use for news other than OTC markets? So good question, Josh. Sources that I use is investorshub.com. That's one that we regularly use. I wouldn't use it to take anybody's word for anything on there, because there's unfortunately some people like to manipulate and bash stocks in order to drive down prices and stuff like that. So I would ignore some of the stuff that people say on there. But as far as there are good people that do good due diligence on there. And if you follow the right ones, you can examine their work and go back through and verify what they've done is correct. But also what Investors Hub is a resource for over-the-counter stocks to release news on. So oftentimes if a PR comes out, it might come through on Investors Hub. And so that is a resource to have when looking for news. The other one is Yahoo Finance. Yahoo Finance probably has more OTC stock related PRs than I would say just about anyone other than OTC markets. Even your broker doesn't really do news releases that much on over-the-counter stocks. Sometimes they will, but it's only if that over-the-counter stock actually pays that broker to release it on their platform. Yahoo Finance, I'm not sure if they pay them or not. I'm sure they do, but it's not nearly as expensive. And so you'll always find news usually gets released on Yahoo Finance. The other one is Edgar filing. So if you just look up Edgar filing, that anytime an 8K or 10K is released, any annual report that gets released is going to be on Edgar. And so those are the main resources that I would encourage you to check out when doing due diligence on any particular stock. Obviously, if you're looking at the company, you want to, check out their website, make sure that, their address, even their addresses and phone numbers and all that work. when you're doing when you're really starting to dig deep. And if you're like doing if you're in a long hold position and stuff like that. So Dwayne asks, what is OTC? So, I welcome you to come into the group. So OTC is over-the-counter stocks. For if you're still not sure on what over-the-counter means, so over-the-counter stocks are stocks that aren't regularly traded on the New York Stock Exchange. They are very tiny companies that maybe don't have all the proper filings or price point in order to be traded on the NASDAQ. So they're traded over the counter. The other term is pink sheets, because back in the day before, the ages of the internet and everything, these were actually literally traded with pink sheets. Actually, we have a couple people within our group that remembers actually trading these with pink sheets. So interestingly enough, so that's the long and short of it. They're not traded regularly on the New York Stock Exchange at all. So Yahoo Financial is free. Yeah, well, it's free to us, but I mean, like, for companies that pay Yahoo Finance to actually release news on Yahoo Finance. That's what I meant. Sorry if I confused you there. Does technical analysis such as support and resistance still apply to over-the-counter stocks, or is it solely based off of news and volume? So a little bit of both. The Taco Production, I love that name too, it asked this question. So in answer to that question, there's a little bit of both involved in that. Now, primarily, yes. If you're looking at it from a fundamental standpoint, I do most of my trading based off of news, volume, any kind of catalyst that may signify a run. But I do have videos that I use indicators such as Bollinger Bands, identified patterns such as channel patterns, and maybe bull flag patterns, as well as a few others to maybe make a nice swing trade out of it, or even a day trade. It's rare that I do a day trade, but you can certainly find those patterns and do some technical analysis, but it's not quite as the same as if you're trading something that's on the New York Stock Exchange that might see, well over $1 million, $2 million in volume in a day. So that's, a brief explanation of how technical analysis might help you down here. Again, it's not that you can't use it down here, but that shouldn't be the only way that you trade, in my opinion, because there's a lot of other factors, and the OTC is a much different animal than if you're just trading on the NASDAQ. All right. Somebody had a question about what makes good share structure. So honestly, I just look at the float for the most part. Anything that has under 500,000 in float or outstanding shares is typically a decent share structure to go off of. And it also depends on, the type of catalyst that's coming out, how well it's moving, the amount of volume that's coming in, because, that's not a hard number, but that's a good average float. Anywhere from 1 to 500 million in float is a good, decent share structure. All right, guys. Well, I am going to leave it at that. I don't like to run these too long. I know I ran like an hour with Peter last night, but you guys seem to be loving it, and I know I did too. So if you are visiting for the first time, welcome again. I'm glad that you stuck through to the end here. If you enjoyed the content here, please subscribe to my channel so you'll get notified when I go live again, as well as clicking that notification bell, and smash that like button if you would, if you learned something tonight. And that is all I got for you guys tonight. As always, I will see you all before the bell, and B. Smith is out.